Hey everybody, we'll be starting in about 60 seconds, so please take your seats. So the topic of this talk is auditing cryptocurrencies and digital assets. If you're here for the other talk, which is digital asset management and new financial products, that's on the panel B, which is on the 6th floor. So moderating this panel is Mark Lee, who is the Assurance Senior Manager at BPM. Mr. Lee has 18 years of experience in public accounting and private industry, including 16 years with a Big Four accounting firm in the Bay Area. Mark has experience in serving financial services companies in a variety of industries in the public and private sector, including blockchain and cryptocurrencies. Joining him on the panel is Martin Levi, Advisor New Technology Innovation at 216 Accountants. Mr. Levi has built up a very strong international network within the accounting industry and connected suppliers in the supply chain. He writes blogs and speaks about the possible future of the accounting industry due to fintech, API, big data, AI, PSD2, and blockchain. Prashant Nisar is the Senior Manager in Financial Services Audit Practice at Thornton. Mr. Nisar has more than 13 years of public accounting experience advising on complex accounting, auditing quality, internal control, and risk management matters. He leads the fintech practice for the firm and serves clients in the cryptocurrency and digital payments processing space. Next up on the panel is Campbell Pryde, President and CEO of XBRL. Before taking on the CEO position, Mr. Pryde led the development and maintenance of taxonomies as Chief Standards Officer, playing an integral role on the executive team. He joined XBRL US from Morgan Stanley, where he managed the equity research XBRL-based valuation framework in the institutional securities group. And finally, rounding off the panel is Michael Smith, partner at PwC. Mr. Smith is responsible for PwC's U.S. Internal Technology Audit Services practice for financial services companies and has more than 25 years of experience in information technology, internal audit, cybersecurity, privacy, IT governance risk, and compliance in the technology space. I also have Ivan O'Donnell, who's a partner at Deloitte, but I sadly don't have a description for him, so maybe he can introduce himself.
Hi, I'm Ivan O'Donnell. I'm a partner at Deloitte in New York. I'm an audit partner. I've been a partner for about 14 years. I've been with the firm about 24 years. Traditionally, I spent most of my time in the financial services industry, with broker dealers, banks, asset managers, and in the last couple of years, I've added some digital currency and blockchain clients to my portfolio.
Thank you. What I want to try to do is give each of us another 30 seconds to speak about their experience and clients that they've served and the space that they've served. So just starting with myself, BPM, as you mentioned, is a Bay Area, California-based company. We've been serving the crypto client contract space since 2014. The type of clients that we serve are mining, wallets, exchanges, as well as brokerage, both in the Bitcoin as well as Ether. Those are the two predominant coins right now. As you know, there's other coins that are gaining traction. Also, we provide, from that standpoint, we do audit of financial statements, as well as income tax returns and provisions, as well as IT assurance in the sense of SSA 16. So we have a very multi-functional approach to our clients. With that said, I want to turn over to each of you to speak a little bit more about what you guys do in the last 30 seconds.
All right, great. So, hey, Michael Smith. This is weird. Normally my voice carries for 5 city blocks, so if this gets too much, just let me know and I'll put the microphone down. But I head up our blockchain assurance practice in the firm here in New York Metro and nationally. And what we have is we have a group that focuses on dealing with the audit challenges connected to processing transactions on a blockchain, specifically in the internal audit space so far. We have not had any instances where this has come up on the external audit side yet. So our focus has been very heavily from the internal audit perspective, mostly in financial services, mostly in areas like clearing and settlement, corporate trust, custody, asset servicing, things like that. So I have a group that we just go around and we build out our real-time transaction level assurance solution for ecosystems processing on blockchain.
All right, good afternoon. Prashant, Nisar, Senior Manager in our New York office. Our firm, also similar to others, specializes in auditing blockchain companies. We do external audits for Bitcoin payment processing. We also do internal audits and advisory services for blockchain clients. Our firm, though in the US, we have capabilities worldwide. We have a network of member forums in Europe, specifically UK, Spain, Canada, Hong Kong. We go in the market collaboratively for our international clients. That's a little bit about what we do in this space.
Hi, it's me again. So our firm essentially approaches the digital currency blockchain market space. We have Deloitte Consulting, there's Deloitte Advisory, there's the audit space, which we try to focus on, and also we have tax practice. My own experience, which I can only speak my own experience, is bringing wants to take questions on other parts of Deloitte. I'm happy to try to answer those. My main experience on the audit side, one of my clients is a Bitcoin exchange. We're in the middle of our second annual audit of that entity in it, so it's pretty interesting. It's a startup, still a startup, although it's a second-year audit, and that's been most of my experience around digital assets has been in the Bitcoin space.
Campbell, Pryde, I'm the CEO of XBRL US. Just to give you a bit of background on XBRL. XBRL is a standard for capturing financial reporting data. One of the things we're very interested in is making sure that the XBRL standards facilitate the capture and transfer of information related to Bitcoin transactions. It might be as simple as capturing what's the, just so international settlement systems can trade things like Bitcoin and Ether. ISO standards aren't set up for that. One of the things we do is just make sure that we can facilitate those transactions. The other thing we're involved in is defining standards for financial reporting things like assets or liabilities. And as you know, Bitcoin and Ether or anything on a blockchain is a transaction. There's probably going to be an asset or a liability involved. So one of the things that we're trying to do is to make sure that there are standards around this stuff. So if people do start making large amounts of transactions of importance on blockchain, that is a standard way of representing those.
Okay, my name is Martin de Bie, from the Netherlands, working at 216 as an advisor in new technology and innovation. I've got no experience with auditing, so that's fine. No, but I got two roles: the IT advisor, telling the people in the Netherlands or the accounting profession in general what are the, let's say, the technology, and 216 is an accounting firm, but behind it is an IT firm, and therefore we are lucky that we can implement very quickly new technology. And blockchain is one of the things we are building at this moment. We're doing some talks with the Dutch government, and that's fun, but also raises some questions. Therefore, I'm here in New York. I'm also, as of 8th June, the chair of the digital working group of the European Federation of Accounting and Auditors, a long way, representing 17 members, 70 countries, and we have a lot of topics, and one of the topics is blockchain, and especially for the small medium practice is how to do with audit. So for me, it's very important to learn from you guys, but take also the information back and share the knowledge. So glad to be here.
Thank you. So as you can see, we have a great group of people with vast experience in both advisory and audit and accounting. So let's just start with the first question, Michael, if you don't mind. I'll hit you with the first question, and then and you can speak of both from the audit or advisory or consulting space. What are some of your general challenges that you see as you're working with these clients, both in the audit, the assurance, and consulting? Is the data issue, integrity, volume of data, the understanding of blockchain, the technology, what is it?
Well, all of those. So, probably the biggest challenge, and the reason we actually created this practice within the firm is that we kept hearing from clients that they would get blockchain use cases right up to the edge and ready for deployment, and then some combination of audit, compliance, legal, regulatory would show up and be unable to sign off on them because the way blockchain processes, it creates a particular challenge for traditional sort of audit procedures. And in fact, to do it effectively, you really have to so fundamentally shift the way that you think about assurance and how it's created and how to derive assurance from those processing engines themselves. And so that's why we put the group together that we have, and we're focusing very heavily in that space. Now, in our here in New York Metro, the principal use cases that have been presented to us have been sort of permissioned back office, specific purpose build-outs around aspects of operational processing. So our focus very much has been from the internal audit perspective. But the biggest challenge that we have seen has been one of, your average internal audit shop just simply does not have the technical skills or the sort of ability to shift in mindset to go from forensic point-in-time auditing to real-time transaction-level auditing.
So from a challenge standpoint, I would start with the challenge would be internally convincing our own people about some of the audit risks related to auditing a blockchain cryptocurrency environment. So at Grant, what we did is we got our national risk head, we got our valuation folks, we got our technology solutions group, and our audit methodology center lead. We all sat in a room together and said, okay, how do we audit blockchain companies, and how do we be more responsive to the industry, to our clients? And we built our own copy of the blockchain. We created our own methodology based on interaction with our existing clients in the space. We got smarter, we joined various forums, networking organizations, and with that, we overcame that challenge in auditing blockchain companies.
From my perspective, I would say that the challenges are also internal, is convincing your partners and your firm that we're not the insurance company for these digital startups. From an audit perspective, I said there are clients I've dealt with around the audit partner or the concurring reviewer. Most of them are startups. In any startup, there's not enough of emphasis on controls. So most of the folks who are in the startup are more entrepreneurial than they are accounting or control-based type personality. So that can, it's going to bring its own challenges, whether it's digital currency or otherwise. But specific to digital currency, I think the greatest challenge is auditing the existence of the currencies. And if you tell someone my age that this string of numbers represents an asset that is over $1,000 in value, I'm going to have a problem agreeing with you and buying up on that unless you put it back into dollars. So that's a challenge.
Campbell, I know you don't do audits, but maybe I can put a spin to this. So with respect to
I
that,
can talk about it.
okay.
I just have no experience in doing it, but
Okay, feel free to do that.
but just from my perspective, obviously, if you're auditing an entity is one thing, and auditing a blockchain is two separate things. And if you're auditing an entity, just some of the stuff that we've seen is looking at the financial statements of these companies is that a lot of them aren't regulated. A lot of them are effectively broker-dealers or exchanges. So there is a lot more risk than there would with a normal entity. There's one company we were looking at, and because they file an XBRL, it was interesting. They're basically an exchange, and you've got a lot of money moving between blockchain and the cash that they're receiving. And one of the problems they have is an operating account, which they may have for making those movements. And sometimes those aren't separated. So if they lose their key, which, believe it or not, happens a lot more than it should, all the assets of someone could have invested in that company could be gone, right? Sorry? They're worth, exactly. And some of these companies would have the tiny little companies with 800,000 equity, but they've got $100 million sitting on their balance sheet because people have given them cash and they're in the process of giving them cryptocurrencies. So there's extreme risk there. Not only the fact that you probably do that when you audit a broker dealer, but there's a lot more traditional infrastructure around a broker dealer. You've got the New York Stock Exchange with this different regulators looking at it. So if you're going to be auditing those entities, just that cut over when the cash is moving to blockchain and back and forwards.
And what Campbell was referring to for some of those that are familiar with Bitcoins and the cryptocurrency, the private keys is what he's referring to, which are what you need to access your assets. Technically, it's like your password, as opposed to the public keys or the ID, what we call the address. So.
And some of these companies don't break those private keys up. You may want to say, hey, all transactions going through a different day have a different private key, but they have one for the whole. It's like you get a private key, you get everything, right? So there's a lot of, and this was mentioned earlier by Ivan, that they don't have a control. They don't know everything that really can go wrong that will go wrong. So.
Yeah, well, what we see now in the Netherlands is that there's a lot of going on. Even though we're small, there's a lot of involvement with the cryptocurrency. And the fun is if you ask maybe a colleague or you'll give me your key, they probably mail it to you. So there's lack of knowledge about security, lack of knowledge how to audit it. So one thing, what I think the biggest challenge is to give enough information to the accounting profession to know how to audit, what the risks are, give good advice, and be the trusted advisor to your customer. Because one thing, they trust you. But if you don't know the technology, well, are you then trustworthy?
Well, and I'd like to add something because Ivan made an excellent point. He talked about people accepting this technology because one of the things that when we come out, because we're auditing the blockchain processing itself, a lot of times the IT folks are like, well, why do you have to audit this? Because we know that it works, right? So what do we need you for? And it's just, in fact, I've been in some places where I've been speaking and people talk, does this mean we're not going to need auditors anymore? And, nothing could simply be further from the truth. I mean, Ivan's comment is really what most of the people in the country really are like. I mean, most people in the country believe, two things. They believe there's a stack of money in the bank with their name on it, and they believe there's a band parked outside their house ready to steal their stuff, and so those people are not going to buy off on this stuff, and particularly in the U.S. And I'll just tell you a real quick side story. If you think back in the early 90s when we were trying to deploy chip cards in the U.S., which then would have only put us 10 years behind the rest of the world, we tried everything to get people to use them. I mean, the card associations paid people money in Manhattan to carry them around in their wallets and use them, and they still wouldn't do it. So we finally get around to implementing chip cards last fall for all the wrong reasons, and we still screwed it up. We put in the hardest form of chip card security and the one that's the least secure. So in the U.S., trust me, I mean, no matter how, it's not about the efficacy of the blockchain processing itself. There's always going to be a need to go and peek behind that green door and see exactly what is happening and prove it to some interested third party.
That's when you put the partner to work, right?
That's exactly right.
That's great. Well, let's start with Ivan and then Prashant. From this question is more for auditing of crypto. So with all those challenges about crypto and the different passwords and private keys that we talked about, what are some of your tools or you might have developed or strategies that you've used to audit the existence of those coins if your clients are holding on to them?
Well, we have several tools that we use as part of any kind of audit, data analytics, and then we have inquiry tools for journal entries, and we have tools that you can actually sit on a client's general ledger and download all the entries. So we didn't feel the need to go out and recreate the wheel. We already created it. So we take the tools that we use in traditional audits and we deploy them when we do any audit, whether it's cryptocurrency or a broker dealer bank, whatever it may be. From an audit perspective, someone mentioned, I think Campbell mentioned earlier, some of these clients are not regulated, but some of them are. So some of them are regulated by the Department of FS in New York, and they're required to be audited, and they need to be audited by 180 days after year end. So that's plenty of time for them to turn over their inventory. So the easiest way to audit anything is to get it back to cash. So we've been very fortunate, in my experience of digital currencies, is being able to see these assets being transferred back into fiat money and then moved back into digital currency, and you essentially just roll forward and you use visualization software to see what's currently in the wallets.
All right, so let me back up a little bit. So there are two big audit risks that keeps me awake all night when I'm auditing a cryptocurrency or Bitcoin entity. The foremost I didn't mention was existence. How do you test existence of a Bitcoin? And the second and the most perceived fraud risk that I think is the ownership. Even though you have existence of Bitcoins, do you have the ability to spend that Bitcoin token? If you don't have that ability through the private keys, then you lost that money, and basically there'll be a big impairment charge, or basically you have zero value asset on your balance sheet. So those are the two biggest risks I perceive as part of auditing a Bitcoin or cryptocurrency environment. And then, as Mark mentioned about how do we overcome those two risks. So at Grant, what we did is we spent a lot of time internally. Also, we were also educated by our clients too sometimes on, we asked them those same questions, and they come up with solutions. And then we built around our own methodology coming around those two audit risks. So let me start with the existence audit risk. So basically, there are two ways to get around it. One is a manual process where you could go on the blockchain and look at each and every public key and see the number of Bitcoins or the BTCs that exist. Or what we've done differently at Grant is we've automated the entire process. So on December 31st, auditor comes in, they give us, the client would give us a dump of all their public key, the number of Bitcoins, and we can process all those thousands of public keys and BTCs in a day through automation because we maintain our own copy of the blockchain. So that is a seamless process and efficient for our clients. And the second process is how do we audit the ownership aspect of the Bitcoins? Do you have the power? Do you have the ability to spend it? So as Ivan mentioned, visualization could be one of them. What we do is every private key there's a signature process, and with the signature process, basically we tell our clients, okay, we give you a text, you sign it off, and that signature is in a encryption process. So if you know the public key, you know the text, and you know the encrypted signature, the delta is your private key. So you can say, yes, this public key belongs to this private key, and that's how we get satisfied over the ownership aspect of the Bitcoin risk.
Thank you, Prashant. So Campbell, maybe take the same question, but I'll put into it. Earlier we talked about smart contracts and how difficult it is to audit some smart contracts because these contracts are on a one-to-one, one-to-many, and many-to-many. What are your thoughts on any as you're working with XBRL on smart contracts?
Yeah, sure. So, as everyone further, I think that the smart contract was a small session this morning. So inevitably someone's going to have the Ether borrow contract, so you can borrow Bitcoin and put it into your account. So if you're testing existence, yes, the company has these Bitcoin, but they borrowed them, right? So smart contracts can open up a world of hell for auditors because you may think you've got those Bitcoins, but you've just borrowed them from someone else, and you have a liability to repay them. So one of the challenges is going to be scanning all those smart contracts to make sure that you don't have on the other tail end of the transaction have a liability associated with them. The good thing is all the smart contracts are there and you can see all the parties to them because they're available. So smart contracts is going to open up a lot more work for auditors to be able to check those smart contracts and check that a company doesn't have liabilities that are sitting out there in smart contracts that you're not going to be aware of.
Just one. In terms of tools, one of the things that we've developed to deal with auditing the transaction processing on the blockchain itself is we've developed an audit node that we can plug into the actual build out. And one of the interesting things about auditing the blockchain processing itself is that what we found is that there's as many variants as you can possibly imagine. If we talk to 20 clients, we have 20 blockchain variants. And the use cases are all unique as well. So from an audit perspective, it creates a whole array of challenges because you have to start understanding what all the assurance expectations are going to be given the use case, and then you have to understand exactly which variants are being used and how that affects the operational process and what the business case is. And so at the end of the day, if you're talking about the underlying transaction processing on the blockchain itself, you really have to have some way to plug into it, and you have to make the audit concept be a byproduct of transaction processing.
Martin? Okay. Going on to the next question. So I'd like you guys to think about it from more from the accounting and valuation standpoint with respect to the cryptocurrencies. We all know that currently there's really lack of accounting standards from a US GAAP as well as IFRS. So as you're auditing these clients, and even Michael, as you're advising these clients from an internal audit standpoint, what are your team's thought process as well as the firm in terms of, what is the accounting? So are these currencies, inventory, investments, commodity, or inventory, if I said that right? And then also, how do you get valuation? I mean, what's the fair value? Are there different websites you use? Are there, there's a lot out there, right? There's GDAX, there's Gemini, there's ItBit, there's the list goes on. So, maybe Ivan, you start.
I'll start. As I mentioned earlier, I work in financial services, so the broker-dealer accounting kind of drives the inventory of whether they're securities or digital currencies. So in financial services, they're going to be investments, and that's so then you work out under the old FAS 115 whether it's available for sale, trading, or health and purity. I would think that in a different industry, whether if you're accepting payment by digital currency, then it's essentially cash. From a valuation perspective, what we've done is use the various exchanges out there to get prices, probably as a certain date, get maybe 3 to 5 if not more prices of what it would cost you to buy a Bitcoin on that date on any exchange. Take an average of the, I won't say known exchanges, but what that are active exchanges.
I will say too that just in general, the lack of standardization is a huge problem, and it's one that the profession really has to take a close look at because, in addition to sort of the external audit aspects that I was talking about, there's a lot of, we're starting to get more and more requests for third-party A-test and other forms of assurance for the infrastructures themselves. So SOC 1 reports, SOC 2 reports, things like that. And it's very difficult to actually do any of that work because there is no standard against which to audit. And again, like I said, when we go out and we look at the actual build-outs of the technology itself, no two of the build-outs are the same. And so having some form of distributable, unlimited distribution assurance is a huge challenge to the industry, and it's something that's going to have to get addressed for more economic viability.
Right, so let's talk about valuation first, which is easy. As I mentioned, we also look at exchanges, we look at data points that you're in, the volume of transactions, is it liquid market, actively traded, and accordingly we would use that valuation input to value a Bitcoin or Ether. And then from an accounting standpoint, more specifically for a payment processing company, they would have, so let's say they do trade in Bitcoins as part of their own business. For those, there's one view that you could think about as a commodity or inventory, and there's a specific guidance, ASC 310-10-30 for inventory, which says it can be valued at a different benchmark in similar to bullion or a metal or something. You could do a fair value market accounting for it.
Thanks. Similar to BPM, we went through the same evaluation. We look at the intent and the ability of those of each each of those clients that we serve because we have miners as well as wallets and exchanges, so we can't just assume, as I mentioned, if it's a true financial services, I definitely agree with you.
The one thing I would caution is if you're going to do an audit, the valuation process you go through for digital currency, it's going to be very similar to what you go through for any other security. You guys audited back in the financial crisis. Think back to then and see how difficult it was to get valuations back then, and use the same principles on your digital currencies. Because if you get if your clients go public and you get the PCAOB not when you don't have a very solid story even how you get valuations.
It's just interesting because I did see when I was involved in this space in 2014, I did a research search and found a company in Australia, and they classify as inventory. So it was really interesting to see the various classification of the asset. But definitely to Ivan's point and Prashant, you have to kind of think through and look at and what Michael mentioned, even look at the existing standards and see how you can analogize it to that standard, knowing that you have no standards to follow.
Can I just say something real quick too? I want to congratulate all of you because this is right after lunch and accounting right after lunch. I mean, I don't know who designed this. It should have been like right before the happy hour or something. But I do appreciate everybody hanging in there. Okay, we're going to keep it. We're going to try not to kill you.
One thing one thing I would like to add is this is more specifically from a blockchain standpoint. As you build your blockchain platform, from an accounting standpoint, you need to consider the internally developed use guidance. You may land up capitalizing that platform if it's marketable and it can generate future revenues, and you have to think about impairment situations. So that's something you want to consider.
So quickly, 1 second answer here. Digital assets, is there level 1, level 2, level 3 from fair value hierarchy?
Level 1. You look at those observable input, which is
Well, the XBRL US coin report is a level 3.
Any other experience in the audience? What level? Level 2. So there's level 1, 2, and 3. There's level 2 as well. I've seen a mix as well, but unfortunately.
I have a question about that. I guess if somebody could kind of spread some light on it around some of the other altcoins that don't necessarily trade directly to the US dollar. Like, would you still consider those, let's say, level 2, or would those have other inputs that are critical to the valuation?
so you say other digital currencies other than Bitcoin that are not translatable into fiat.
Correct, yeah.
Is it worth anything? Can you,
Yeah, well, there's
I don't
exchanges
know.
that value them, correct. So
Yeah,
there would
so
be exchanges that, so like, for example, let's say like Ripple or something like that, which you can't necessarily purchase with the US dollar.
Yeah.
Would you, there's an exchange out there that says what it's worth, but the valuation would be based on the Bitcoin valuation, I guess.
Well, I would think even if it's not easy to observe, so you go through the standard, and I'm not going to be able to quote the standard to you, too much gray hair to quote all accounting standards, but if you look at the standard, it actually gets to what's observable. I think what you're talking about sounds more like a level 3 than a level 2 or 1. To be honest with you, I think that's just based on the facts that you presented. Happy to challenge you afterwards if you want to explore any further.
I'm even wondering if you do have fair value, because I think the standards to meet fair value, you have to have some sort of principal or most advantageous market, right? So,
Yeah.
so if you don't meet that standard, I'm not even sure if you have fair value.
I happen to I'm the CFO for Pacman, and I want to know which one of you guys get a stand with you when the service shows up, and I tell them that we converted from one cryptocurrency that had a value into something that didn't, and that I can assure you there was no gain on that. Like, I think that's a pretty tough one. I only ask that because we have more laws in the books right now for marijuana than we do for cryptocurrency. So as you talk about it, I'd just like to hear what standards you are using to kind of get down to the point.
That's a great question. So a lot of your audits in US GAAP or IFRS, or a combination of both. So does BPM, we have a combination of both. So.
Yeah, same both.
GAAP, you have to IFRS.
Question.
I just know him so well because he's blocked back.
You guys are doing
Him and I just go way back.
just one question. Hypothetical scenario. Let's just say we have a private chain that has 3 companies, 4 companies, 5 companies, whatever. If we're talking system audit, right, so we kind of commingle internal and external audit on this panel, but from an internal audit perspective, do you think that the internal audit leader of each respective company that's represented on the chain is going to require its own system audit of just their node, or is that even really a thing anymore because it's a network and the nodes really make up the system? So do you, in a multi-party private chain, need one system audit, or do you need a system audit for each node?
So, excellent question, JD. As usual.
I think we paid
I'm
him
sure,
to ask that question.
I think everybody in here probably knows JD anyway. So look, it's an interesting question, and I think there's a should be answer and there's a reality answer. Okay, so the reality answer is I think the expectation is that every participant's going to want to have their own form of transparency into their part of the ecosystem. I mean, it will depend heavily on the nature of the industry. So if they're financial services, they will absolutely all expect some form of transparency. The problem is that what would be ideal for that would be some type of A-test report that whoever is the mothership for the ecosystem could generate at one time and distribute to all of the participants. But since there's no standardization in technology and there's no standardization in the profession on how to deal with it, like the gentleman said here, and I just, of course, as soon as you said that, the first thing that crossed my mind is how many laws are there about Bitcoins and buying marijuana? But in the absence of that, you're not going to be able to produce a distribution report to meet their expectations. Now, again, it's going to be industry dependent. If you get into a products and services group and they're all equally involved in the development of the ecosystem, there's probably a way you can make that work with some type of consortium, but it would only, fundamentally you have to think about each individual company has an internal audit function for a specific reason. So they're all going to want peaks behind the window.
Yeah, just a comment. I've worked with JD.
Like I said, everybody knows JD.
Who doesn't know JD? Raise their hands.
We're working on, with legal, we're working on building out technology, software technology for the blockchain, and we're looking at system audit. And one of the interesting things is we looked at the alignment of IT type standards and see not any real conflict there. But one of the things that we're interested in order to address the thing you said, Michael, about working on different exchanges and all the different things is that I think, Campbell, you probably know this. There's an audit data standard developed by the AICPA and most of the big 4 here. And one of our thoughts is it would be excellent if we could use, and it has an XBRL component, so you can convert to XBRL. That would give us a common language to be able to, have audit analytics that are across exchanges or across different controls, with analytics. So just a thought to please consider that as you're doing audit.
It's being worked on.
What? Is that Eric? Okay, good, Eric.
Yeah, and it is. I mean, it's not. It's not bad. The problem is that when you start, the problem is to get to. I mean, and it's an excellent idea, by the way. First of all, as Eric said, they're moving along, but the problem is that to get to, an unlimited distribution type of report, whatever it is, there has to be a universally accepted standard to audit against.
Right.
And the problem is there isn't a decent, at least in my opinion, totally my opinion, not the opinion of the firm or any of the member parties, that I don't think there's a decent crypto standard out there. And the other problem is that like I said, I mean, without exaggerating, if we talk to 20 clients, there are 20 wildly different variations of blockchains that are built out. So I mean, in order to get a standard, you're going to have something approaching some technological maturity in within blockchain itself before you can get something that you're going to be able to distribute.
And one other comment, just talking about standards. There are a lot of organizations out there that are being created to help at least put this topic on the table for the FASB to consider. I'm sure some of you guys are already on board, but there's Chamber of Digital Commerce. I think we heard from Jason Brett earlier. I actually been involved in them as well, and obviously here, ABC, and then there's a group in the West Coast called Digital Asset Accounting Consortium, which I belong to as well. We all meet regularly, at least monthly, try to just get these topics on the FSB, things to do, and hopefully. And so I would say get involved if you like this space, and the more letters that you can send to them, I think hopefully that would help alleviate the
I recommend torches and pitchforks if it'll help.
Got to be nice to them to get the stuff on.
Your question is, our firm going to respond to the PCAB proposal?
Repeat the question, please.
So, the question, I believe, is the PCAB have issued a proposed auditing standard around auditing estimates, and are the accounting firms going to respond to the proposed auditing standards? Well, accounting for estimates.
So yeah, would the digital asset be including standards? Is that?
I honestly can't help.
Well, I think what happens is every firm has their own group of national office that sits on the audit standard board, and the question is about auditing estimates with respect to cryptocurrencies. So the question boils down to is, can you fair value, or is there an estimation required to fair value the Bitcoin? In my knowledge, if it's a level 1 type fair value classification that is direct market actively traded, there is no estimation of it, right? You would have land up with an estimation for other cryptocurrencies where there is no market for it, and for that you would need to see or check with management if there has been any trades that occurred in the past, and use that information to value that cryptocurrency, and that value may not be that material.
I'm not sure if that auditing standards will address estimating fair value. There's different standards for fair value of investments, and that you would want to follow for cryptocurrencies or other digital currencies rather than estimating the estimate part. So it's probably looking more at the legal exposures and other types.
We're looking at what they pay each of them.
Yeah. Yeah, as I mentioned, each firm will have the opportunity, not just the Big Four and the other firms, it's all accounting. Anybody can respond to PCAB on the standards.
Ivan and I cannot. Here.
My pensions for the 2003.
We have no opinion of any kind.
So what happens is these are principle-based standards, right? That applies to all industries. So there is no specific industry for digital currencies set right now. But definitely, if something comes up, we can take this matter up with the regulatory standard, the PCAB.
All right, we got a couple minutes left, really, so we're running against time. But just quickly, guys, 30 seconds. So, if you look a year forward, how is auditing or advisory services going to change or evolve? Is it going to be harder, less accounting folks we need to hire because we can do it remotely? Your thoughts?
So as I said earlier, there's always going to need to be an audit profession. I mean, we'd be very clear about that. But if you ask me down the road, I mean, it's going to look and feel materially different. And that's being driven by things blockchain's part of it, but it's also being driven by AI, robotics, continuous auditing, and a whole host of other things that are changing the nature of the profession. In fact, I would tell you that in a couple of years out, there won't be a distinction between tech audit and non-tech audit. When you start looking, what it does is it really says a lot more about how we're going to define what an auditor is. And I think instead of your traditional sort of MBA accounting prep. I mean, they're going to have data analysis skills. It's going to have to be much higher than standard IT IQ. And quite candidly, the university system has been woefully slow to react to that. And so, we need to push there, and we need to adapt.
So just make sure I understand the question. How is auditing digital currencies in a year going to be?
In a year from now, how is auditing going to evolve or change in your view?
For digital currency. Okay, so I think my hope rather than thought is that the entities involved in digital currency will have better, smarter control environments that the auditor can actually audit, as opposed to massive amount of details of standard type testing that takes an awful lot of time and is very, very expensive. There's more of an investment in the control environment. So to Michael's point that you're using data analytics, you're using smarter techniques to audit transactions. So there's no need or not no need, but less need to do substantive testing. And the better infrastructure in these organizations around the control environment and the accounting process. Is my hope.
Yeah, so my view is that there are two folds, one from an audit firm perspective and then one from our clients, which are basically startup companies. Let's start with audit firms. We will have to be engaged with our clients. We need to build our technology surrounding the blockchain, understand how that works, look into that existence, ownership testing, if that methodology should evolve from a fraud risk standpoint. More so from startup companies, I think it'll be great to have discussions with various audit firms, how their client acceptance process works, because it's not that easy. It can take a lot of time. Be cautious about what business you are getting into. Most of the speculative type cryptocurrency audit firms are risk averse. So just keep that in mind. We are very cautious about who we take our clients. Try to build controls. What Ivan mentioned, we have clients that for private keys, they've built an AES double layer encryption technology, 256 characters. Most of the private keys are stored in cold storage. They print it and store it in a bank locker. So be cautious about the risk management part of that storing of digital currencies to satisfy auditors and make them comfortable how you do your business.
All right, I think this ends our session. I know we're running on time. Sorry for a couple minutes. If you guys are welcome to speak to any of these folks afterwards and catch up with us with a fresh question. Thank you guys.